You've embraced hard work and you achieved success. When it comes to your financial future, there's no leaving it to chance, but there is a lot to consider. Estate tax, market volatility, income tax, Social Security, and that's just the tip of the iceberg. I'm Southwest Florida's financial planner, Alfie Townsend, and protecting and growing your nest egg is my business. Coming up on today's show,
corporate tax hacks, unexpected retirement expenses, the ins and outs of estate taxes, and much more.
Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group. Alfie is a published author, radio show host, speaker, and industry leader.
why do you use an annuity? A lot of people use it for the wrong thing.
He works with retirees and pre-retirees to build and protect their nest egg and offers his experience to help those concerned about financial independence in retirement. If you've got questions about retirement, Saving the Investor starts now.
Good morning, everybody, and welcome to Saving the Investor. Great to have you with us. I am Craig Wolf alongside certified financial planner professional Alfie Townsend here at the Advantage Retirement Group. Alfie, I don't want to date you because you're a nice, young, vibrant guy, but you've been doing this, I think, for almost 40 years, if my math adds up. Have you ever seen an environment where businesses got hit as hard as they did during COVID-19?
Absolutely. Never could imagine shutting down our country the way it was shut down. And it did affect the businesses, and a lot of, of course, the hospitality really took a travel, and they're still recovering. And now we're talking about raising taxes, corporate taxes from 21 to 28, and they're saying, well, it only affects people that make earners of 400,000. Then I found out that a couple weeks later it wasn't 400, it was 200 a person. 200,000 per person. It's going to affect a lot of people. So raising corporation taxes from 21 to 28, if you do the math, it looks like it's only 11% or 7% difference, but it's really like a 25% difference, 30% difference. It's a big increase for corporations. Now, what they're going to do, they could go back and move out of the country again. That's what they did when President Trump took over. A lot of them came back because it went from 35 to 21. So they said, we can live with that. But now they're trying to raise them again, and we're just really getting back on our feet. And a lot of people say, well, it's not going to affect me. It does affect you, because you think if you work for a corporation that's not moving out of the country, they're not going to pay that tax. That's a big difference in margins that they get to keep. So they're going to pass it on to employees, meaning that if you were going to get bonuses, your bonus might be smaller. You might not even get a bonus. It's going to be hourly wages could be coming down a little bit. It will trickle down to not just the employees, but it's going to affect the consumers also, because they're going to add it right back on to the costs of what they're making.
I would imagine, it's so sad, especially in the restaurant business, locally and around the country. There's so many, mom and pop restaurants that are not going to be coming back. Will this affect the ones that took the hit, stayed alive, and have some hope for eventually getting back into business and getting back in the future? I would think the last thing that they would want would be a 7% in corporate taxes.
Yeah, and it's 7%, but if you take the percentages, it's 25-30% additional expense that they didn't have. And so I think it's the wrong thing to do. A lot of, when you have a lot of taxing, and if you have a lot of spending, I should say, that's going on, a lot of printing money, a lot of giveaways. They're trying everything they can right now, DC, to get extra money in. And the thing about it is they're going to get extra money, and I think we can spend our money better than the government can spend our money. So what you have to do is plan. You have to plan for these added expenses, these added taxes. We have to get some tax-free income for our clients down the road. We're looking at that. We want to look at doing some things right now. There's with the tax map, there's two strategies that people need to take advantage of.
Let's back up for a second. What's the tax map?
Well, the tax map is going to really look at what they have, and then there's 2 strategies that's available right now that can reduce their taxable income, for in the future, but also gives them tax-free money, because we know taxes are going to go up. It's just a matter of time. So these are things that we need to look at and get that tax-free money, because if we have tax-free income coming in down the road, then it's going to be, especially with estate taxes coming down, it encompasses all that. We know what's coming down the road, so now we talk about it to be proactive instead of reactive. You want to be proactive, that means you have a plan. Reactive is if you wait till everything happens and then you act, and then you're fixing your problem. So it's important to look at it now.
All right, whether it's Social Security, taxes, emotion, uncertainty, the stock market. Plenty of tools here at the Advantage Retirement Group to address all of those topics for you. Speaking of the Advantage Retirement Group, there are more folks coming up in a couple of minutes with Alfie to talk about everything that's offered here at the group.
You are watching Saving the Investor, where your money matters.
Let's face it, taxes may seem high, but in reality, they're the lowest they've ever been. And with the national debt continuing to rise, wealthy investors like you are facing higher income and estate taxes. These looming tax hikes can potentially have a dramatic impact on you and your children. How will you combat these hikes? Well, Alfie Townsend would like to help. Alfie is a certified financial planner professional. His customized tax map is designed to mitigate the impact of what might be the greatest tax hike in nearly 3 decades. Alfie's tax map uses 2 main strategies to achieve 3 goals: lower your tax bracket, protect your money when taxes rise, and create tax-free income. Many people with wealth employ the strategies in Alfie's tax map to preserve their savings and protect their legacy. And if you're one of the first 9 callers right now, you can too. Call now, 239-747-1080. That's 239-747-1080. This complimentary tax map offer is only available to the first 9 callers, so don't wait. Call now, 239-747-1080. The time to reduce future taxes and create tax-free income is right now. Call and ask for Alfie's tax map, 239-747-1080.
Well, good morning, everybody. I hope you're enjoying your coffee. I know I did. I'm working on my 2nd cup already. And we also, this segment is called Coffee with Alfie. And I'm just going to ramble a little bit about some things that I feel is important. This is what I hear from you, what I hear from clients that come in, and there's a lot of concerns out there. And one of the, I give an example of this. When it comes to retirement, and I love boating. I know if you live in Southwest Florida, you're going to either be a boater most likely, or you're going to play tennis, golf. You're going to have one of those activities, outdoor activities. But when it comes, I love boating. And before I go out though, if I'm going to take people on a boat and go out, I'm going to check the radar. I'm going to check the radar and see when the rain is coming in, if there's any storms ahead. And if they are, where are they coming from? Because I'm going to keep away from that. The same thing when it comes about taxes. I think we have a storm coming ahead of us right now in taxes. You can just see it. The writing's on the wall. We have high debt. We have more government programs, more giving away. They got to pay for it some way. The government has to pay for it, and it's going to be us. It's going to be all of us. We're going to have to pay more than we ever had to pay in the past, because the debt is higher than it's ever been. So how do we do that? We want a plan. We want to do that. We call it the tax map. The tax map is going to dig into strategies right now. 2 strategies that are very important, that talks about your taxes and talks about your tax-free income down the road. Can you imagine? Let's talk a little bit about tax-free income. If you can have tax-free income down the road when taxes go up, you're not going to be hurt when your friends are talking around the table about how taxes, how their income, how their IRAs are being taxed to the hill and putting them over a different tax bracket, which is affecting your Social Security, your Part B, your Part D. It's affecting everything to do with income. It affects your tax bracket, your marginal tax rate. It affects everything. But tax-free, you're going to look at your friends and say, I don't really know what you're talking about. Taxes aren't bothering me because you planned. We always say here at the Advanced Retirement Group, it's better to be proactive than reactive, because when you're proactive, that means you have a plan in place. When you're reacting, you're fixing a problem. So there's some things you can do with the tax map. And the tax map, again, it's going to dive into two main items that you need to concentrate on now for the future regarding your income tax-free and regarding reducing your marginal tax rate. So give us a call and we'll get that over to you.
You are watching Saving the Investor, where your money matters.
When you're nearing retirement, it's important that your plan includes the proper steps to make an efficient and effective transition. There's a lot to consider. Will your income plan meet your lifestyle? How should you reallocate your assets? Is your withdrawal plan tax efficient? Practice does make perfect, but you only retire once. So how do you know you're making the right decisions and avoiding costly mistakes? Well, it's simple. Call Alfie Towngen, Southwest Florida's certified financial planner professional. Alfie has more than 30 years of experience helping people just like you transition into retirement. So be one of the first 5 callers and get your complimentary retirement transition review. Call 239-747-1080. There is no cost and no strings attached. So call now, 239-747-1080. Your retirement transition review includes key deadline schedules, asset reallocation guidance, income plan analysis, and tax-efficient withdrawal strategies. Again, be one of the first 5 callers now, and this review is yours at no cost. Call 239-747-1080. You only retire once, so let's get this right. Call Alfie now.
Welcome to another segment of Team Talk. I'm Mary Thompson in studio with Alfie Towngen, our founder and president. Alfie, as you meet with our clients, there's a lot of things that you talk to them about, but I think there's some things that are unexpected expenses that really blindside them. What are some of the biggest things that you're seeing?
Well, a lot of times people are just looking at their expenses. They'll add travel in there. They'll add medical insurance. They'll add, all these expenses. But what they don't take in consideration is long-term care. That's a very big expense that can happen, not just to pay for long-term care, but will take away from your wealth in the future. So that's one of them. And the other one is really taxes. Taxes is a ticking time bomb. And with the debt that we have so much debt that we're carrying on and adding on to that is going to be a big burden down the road, because if you're taking out let's just say $3,000 a month, $5,000 a month. Well, now all of a sudden, if the taxes go from 20% to 35% for you, that's a substantial amount of money that comes out. And then if we take in consideration inflation, so those are the things that we want to tackle. We want to tackle future taxes. If we can fight taxes in the future, if you can have some tax-free income, that's a great thing. So taxes in the future, we want to tackle that. And we also want to tackle inflation. Now, inflation can be tackled a couple different ways. If you have tax-free income and taxes go up and you're not worried about taxes on that money because you're not paying any taxes, so that helps fight that. But portfolios will help fight inflation. So we have to look at portfolios. We have to make sure that you're not taking unnecessary risk, and make sure that you're in asset classes that are aligned with your retirement.
That's right. People do need to make sure that their portfolio is aligned with their retirement.
Oh, for sure. Absolutely. You have to just look at a lot of things these days because, when I first started doing this, Mary, it was not as complicated because interest rates were higher. We're in a very low interest rate environment. We have a lot of things right now that are not normal in the sense of what it used to be. So we have to really tackle retirement a little bit different.
That's right. Well, if it's time for you to tackle retirement a little bit different than what you've been doing, give us a call.
You are watching Saving the Investor, where your money matters.
Are you concerned about creating your dream retirement? Well, I've got just the book for you. And unlike most books on investing, it doesn't require a huge investment of your time. It's not filled with financial jargon and difficult to understand explanations. It's an easy read filled with valuable insights. So valuable, in fact, that everyone who's soon to be or is already retired should have a copy on their shelf. And today it can be yours at absolutely no cost. It's Keeping You on the Retirement Fairway, written by Alfie Townsend, Southwest Florida's certified financial planner professional, radio show host, and TV personality. Keeping You on the Retirement Fairway highlights real stories about actual people, illustrating what they've done wrong and what they've done right. The strategies in this book can help retirees and those soon to be retired make the right decisions and avoid costly mistakes. So if you save for retirement, Keeping You on the Retirement Fairway is a book you will want to have, and you can get a complimentary copy today simply by being one of the first 5 callers. The number to dial is 239-747-1080. Again, that's 239-747-1080. There are no strings attached, so if you're interested in living your dream retirement, you've got nothing to lose and quite possibly a lot to gain. So call 239-747-1080. Your complimentary copy of Keeping You on the Retirement Fairway is waiting.
You've got questions, and Alfie has the answers that will keep you on the retirement fairway. I'm still a little away from retirement, but I'm worried about tax increases. What can I do to protect myself?
A lot of people are worried about tax increases because it's most likely what's going to happen. We're probably going to have higher taxes in the future. We have a high debt. When you have a high debt, the one way to get that thing paid down is raise your tax bracket. So if you can do some Roths right now, if you do a Roth conversion, if you do some tax planning, a lot of times you can do it with a life insurance policy. Believe it or not, there's ways to do it in a life insurance policy. You're young enough where you can put that extra monies in and be able to take that money out tax-free down the road. But there are ways to really lower your taxes and increase your returns down the road by not having to pay taxes when you're taking that money out. But planning is important with higher tax in the future.
Are all financial planners and investors fiduciaries?
A fiduciary is going to be someone that looks out for your best interests. As a certified financial planner professional, I'm a fiduciary. As a registered investment advisor, I'm a fiduciary. That means we have to put your interests first. Not all financial planners, or I should say advisors, are fiduciaries. Some of them just do insurance products. So if they're just insurance licensed, they're not going to be a fiduciary. If they're a broker, some of them are fiduciaries, some of them are not. So you have to make sure that they are fiduciaries, and you ask them that question: are you a fiduciary? And let them explain what a fiduciary is. And really what it is we have to look out for your best interest first, which I think that's basic when it comes to financial planning.
Ready to live your retirement dreams? Then it's time to meet Alfie, Southwest Florida's certified financial planner. Schedule your complimentary retirement income plan review now. You are watching Saving the Investor, where your money matters. You have a club for every scenario, a driver for the long holes, wedges to get over the hazards, and a putter when you need a touch of finesse. And you'll need plenty of these too. What about your retirement? Will you have enough to play the back nine? Find out today. Schedule your complimentary retirement income plan review with Alfie Townsend, Southwest Florida's certified financial planner. Call 239-747-1080.
Well, good morning, everybody. And this is a segment that I just love. Greg Nussbickle is the attorney, is an attorney here in Southwest Florida, but we're going to talk about estate taxes. I know, I always say this. I always talk about how people will plan for a trip, a vacation, their vacation. They'll spend more time, they'll spend a month or so, even more, planning for a vacation than they do financial planning. And there's a lot of stuff happening right now. And I want you to tell the audience what's happening that you see with estate taxes and where they are and where you think they're going.
Well, there's some big changes in the works. So I think the reason why a lot of people haven't concentrated on estate taxes is because right now, for instance, you need about $12 million to have to worry about it, and you can multiply that times 2 when you're talking about a married couple. So that takes a lot of people out of that conversation. But the laws that are in the works right now are going to change that from about 12 million down to 3.5 million apiece. So a lot more people are going to find that they need to be thinking about this, and more importantly, even preparing for this now.
And it could even go lower than that. We just don't know. That's what we're hearing, though, huh?
Absolutely. And hopefully your assets are going to appreciate over time. And if that's outstripping the inflation, then you're going to have more trouble as time continues on. But you can do a lot now. There's some really great vehicles to make sure that you're not caught off guard in the future.
So estate taxes, explain what estate taxes are. I know what they are, but when you look at estate taxes, is it going to be everything they own? How do they tally that $12 million up?
Yeah, you look at everything you have an ownership interest in, and you calculate that gross amount, and then you see if you're going to be over the exemption. If you are, as it stands, there's a 40% tax bill for every dollar over that amount, and that's only going up with this new legislation.
Yeah, so if you have no planning going on, if you just are saying, you know what, I'm okay, and then all of a sudden it goes from 25 million for a couple down to 7 million, that is huge.
Yeah.
That's huge. And someone that has a $10 million estate, they're going to be in the millions paying taxes.
Yeah, and Uncle Sam's going to want their money fast, and they want it in cash, so it adds another problem with liquidity for your loved ones, so you got to be careful.
It's about, 6 months after the death of the last parent or last spouse, all the taxes are due?
Yep, 9 months
There's a 9 months and a 6 months.
Yeah, there's decisions to be made within that 6 month period about how you're going to handle it, and depending on who's alive and how much you own. But if you wait to do the planning after the fact, then it's really not going to work out that way.
It doesn't work. It doesn't work. So, people that have land, people that have assets, people that have, large IRAs, if they have houses, and, they worked hard, they accumulated. So if you're looking to save your legacy for, your heirs, this is the time to plan, because you're right. A lot of people say, I'm never going to hit the 25 million. It was going up. And now they're talking about taking it from 25. And we were talking, you said, 2000, it was at like 600,000?
Yeah, 670,000 thereabouts. And it's been going up ever since. So It's been off the radar screen. It's been kind of a back burner issue. But we're going to have that pendulum swinging right back down to earth here. And a lot of people aren't considering you may have an inheritance coming in that might increase your gross estate, or a life insurance policy that you own, that death benefit can be counted against you also. So there's some gotcha moments and some things that maybe aren't really front of mind for people that you want to evaluate. You want to take the right steps now to take care of it.
So let's say somebody owes, $2 million, for example, but all their assets are hard assets. And let's say we're in a housing crisis at that time. How do you get the money to pay the $2 million?
Yeah. It can be a fire sale, unfortunately.
That's
sometimes.
What happens.
Yeah, they have to scramble at the worst possible time. Uncle Sam's going to want that check, and it's going to be a big figure.
And that's what happened to the Miami Dolphins, Joe Robbie. I know I talk about that with clients because they didn't do any planning, and they had a fire sale theirs. And it's the same thing. You don't want to be in a situation that it's going to happen. It's already, the process has started already. So this is a great time to do some planning now, so you don't have to have a fire sale, and you can take advantage of 25 million right now, 25 million, and that could be in your back pocket. But if you don't do any planning, you lose a 25 million. You lose a 25
if you're
million.
Waiting until the moment when somebody passes on, then you're stuck with whatever that exemption is at the time.
Yeah.
But you could max that out now if you had that kind of wealth.
So there's things you can do now to protect that 25. We know we have 25 million. Most likely going to go down to 7 million. We got to take advantage of it. So if you're in a situation, this is the time to do some planning.
Yeah, and you can get some extra benefits as well from creditor protection and succession planning and taxes going down further generations. So it's a really great opportunity that should not be missed.
Yeah, so like Greg is saying, this is a time for planning, and if you fail to plan to fail. They always said that. That was one of the great quotes there, but you need to do some planning, and this is the time to do it. Look forward to talking to you.
At Advantage Retirement Group, our business is your retirement. We're passionate about learning your hopes and dreams so we can work with you to achieve them. By maximizing the money you've saved, minimizing the dollars you pay in taxes and the risk you're exposed to, and creating a retirement income plan that ensures your savings lasts a lifetime. Call us today for your no-cost, no-obligation evaluation. Call now, 239-747-1080.
Retirement gives you long-awaited opportunities. You finally gain control over how you spend your time. But you also need control of your investments, of your hard-earned money. There are a lot of moving parts, and just saving over the years is the first part. What about generating income, your Social Security, minimizing taxes, or managing risk? If you save for retirement, call us at 239-747-1080. Retirement can last more than 20 years, yet many people don't have enough money saved to get through 1 decade, let alone 2. Call us at 239-747-1080. Let us show you how to make your nest egg go the distance. That's 239-747-1080.
Mondo Uomo specializes in remarkable clothing for the remarkable man, like our exclusive selection of Bugatti and St. Croix shirts and sweaters. Visit our store in Naples at the Village on Venetian Bay or online at mondouomo.com.
Remember the Wall Street bailouts? Those same big banks and financial firms have been fined billions for misleading customers. And now they want to manage your retirement savings. Why would you trust them? I'm Alfie Townsend, Southwest Florida's certified financial planner professional. My values are Main Street, not Wall Street. As an independent advisor, I don't work for shareholders, I work for you. If you want a fresh start with a local advisor, give me a call today.
Mondo Uomo offers a remarkable selection of the latest styles in menswear. Visit Mondo Uomo at the Village on Venetian Bay in Naples. Alberto, Bugatti, St. Croix, Zanella. Come see what remarkable shopping is all about.